Look, I'm not going to sugarcoat this. On January 27th, 2025, a Chinese AI company you've probably never heard of wiped out $589 billion from Nvidia's market cap in a single day. That's not a typo. $589 billion gone. The Nasdaq dropped 3% and tech stocks, total bloodbath. But here's the thing keeping me up at night. This wasn't just a market crash caused by something breaking. No, this was a wake-up call. The game we thought America was winning? Turns out China's been playing it differently, and they might just be winning. I've been tracking US-China economic relations for months, and what I found is honestly terrifying. Before we dive deeper, hit that subscribe button. You won't want to miss how fast this story is moving. Trust me, it's big. Let me take you back for a moment so you can really understand what's going on here. For years, China's been America's economic frenemy. We buy their stuff. They buy our bonds. Everybody's making money. But in 2024, that changed. China's economy officially hit 5% GDP growth last year. Sounds decent, right? Not so fast. When you dig into the numbers, things look grim. According to the World Bank's December update, property investment in China fell 10.6%, the steepest decline since they started keeping records in 1987. New construction starts, down 23%. Property sales dropped 12.9%. Think about it. The property sector, which holds the bulk of Chinese household wealth, is crumbling. So, what did China do? In September 2024, Beijing finally pulled out the big guns, what analysts are calling the fiscal policy bazooka. For the first time since 2011, they shifted to a moderately loose monetary policy. Translation? They panicked and started throwing money at the problem. They announced 10 trillion yuan, around $1.4 trillion, refinancing local government debt and boosting the stock market. Surprisingly, Chinese stocks surged. The MSCI China Index returned 15.61% from July to December 2024. After 3 years of losses, investors finally saw a win, but here's the catch. Fewer than 10% of Chinese households own stocks. Compare that to over 60% in the US. So, while the market's climbing, most regular Chinese citizens are still broke and terrified. Let's talk about the elephant in the room, Trump. During his 2024 campaign, Trump floated the idea of a 60% tariff on all Chinese goods. That's not a negotiation tactic, that's economic warfare. Analysts predict that could drag China's growth by 1% if it happens. Doesn't sound like much. Well, when you realize China's only growing at 5%, that's a pretty big hit. But here's where things get even crazier. American companies are terrified. Apple gets 16% of its revenue from China, but here's the kicker. Apple doesn't even manufacture anything in the US. They make everything in China and sell it everywhere else. So if Trump slaps 145% tariffs on Chinese goods, that hits American consumers, not China. Your iPhone just got a lot more expensive. Tesla, they get 21% of their revenue from China. And get this, Tesla's China sales dropped 19% year over year in early 2024. Meanwhile, Chinese EV maker BYD is dominating the market with a 29% increase in pure EV deliveries. Tesla's market share in China shrank from 7% to 4% in just a couple of months. Nike manufactures most of its products in China and Vietnam, and Intel gets 29% of its revenue from Chinese customers. The tariff war is hitting everyone differently, but it's hitting everyone. Analysts have pointed out that major U.S. companies with China exposure, Apple, Tesla, Nike, Lululemon, underperformed significantly in 2024, despite the S&P 500's 20% increase. Now here's the part that really made me sit up straight. January 23rd, 2025, a Chinese startup called DeepSeek, founded just in 2023 by a hedge fund guy named Liang Wenfeng, released something called the R1 AI model, and it's incredible. It's on par with ChatGPT, Google's models, Meta's models, the kinds of things that take billions to develop. But DeepSeek claims they built it for only $5-6 million using just 2,000 Nvidia chips instead of the 10,000 plus chips US companies typically use, and they did it in just 2 months. By January 27th, DeepSeek's app shot to the top of the Apple App Store, pushing ChatGPT to second place. And then, boom, the market just collapsed. India lost $589 billion in the biggest single-day loss in U.S. stock market history. Microsoft dropped 2%, Alphabet fell 4%, Broadcom was down 11%. The entire AI infrastructure story Wall Street had been betting on suddenly looked like it was in jeopardy. Mark Andreessen, one of the biggest tech investors in Silicon Valley, called DeepSeek's breakthrough one of the most amazing and impressive things he's ever seen, comparing it to the Soviet Union's launch of Sputnik. That's how big a deal this is. The US has spent years restricting China's access to top AI chips. National security concerns, right? We cut off their supply of advanced Nvidia chips, but somehow they built this anyway, using less powerful H800 chips that aren't even banned. Let that sink in. Here's what this means. Either DeepSeek is lying about how much they spent, which, by the way, no one has proven yet, or China just demonstrated that you don't need to pour billions into AI infrastructure to compete. You just need to be smarter about it. Some analysts, like Stacy Razgon from Bernstein, think the market panic is overblown. He told Yahoo Finance that this doesn't spell doomsday for AI infrastructure. Others, like Daniel Newman from Futurum, believe this could actually be a good thing. More efficient AI means more adoption, which means more demand for computing power. Before we dive deeper, hit that subscribe button. You're going to want to stay on top of this story as it develops fast. But here's my take. Wall Street isn't panicking because DeepSeek's AI is good. They're panicking because America's lead in AI just got a whole lot smaller, and it happened way faster than anyone expected. So what happens next? Let me walk you through 3 possible scenarios. Scenario 1, the trade war escalates. Trump takes office and actually pulls the trigger on those 60% tariffs. China retaliates, and American companies, your Apples, your Teslas, your Nikes, get crushed. Supply chains that took decades to build get torn apart in mere months. Some analysts, like those at CraneShare, think Trump might seek a grand bargain with China, using tariffs as leverage. But that's optimistic thinking. If this goes south, we're looking at years of economic pain. Scenario 2, the AI race goes into overdrive. DeepSeek proves their success wasn't just a fluke. Open source AI becomes the new normal. Suddenly, the billions US companies are spending on proprietary models look like a huge waste. The entire AI value chain gets disrupted. But here's the flip side. If AI becomes cheaper and more efficient, adoption explodes. More companies will use it, productivity will surge, and the addressable market will grow. Chinese tech stocks are already bouncing back. The MSCI China Index was up 13.9% year-to-date as of mid-February 2025, dramatically outperforming the MSCI USA Index, which was up just 4.4%. DeepSeek has created a halo effect, making investors take a fresh look at Chinese tech companies. Scenario 3. The decoupling between the US and China accelerates. This is the scenario that worries me the most. The two countries split, maybe not completely, but enough to cause serious disruptions. Companies scramble to diversify their supply chains. Critical technologies get siloed. The world divides into competing tech spheres. Apple's already trying to hedge by moving some manufacturing to India and Southeast Asia. But here's the issue. Every time Apple reduces its exposure to China, it ticks off Beijing, and Beijing can turn off iPhone sales in China like flipping a switch. In 2023, Apple's China revenue dropped over 10%, from just under $24 billion to just under $21 billion. That's a $3 billion loss, and that was before things really started heating up. Here's what you need to understand. The narrative that America is untouchable in tech, that just died. China's not just catching up. They might be leapfrogging in some areas. The companies you own stock in, the products you buy, the entire global economy, it's all getting reshuffled right now. And it's happening fast. I'm not saying panic, but pay attention. The decisions made in Beijing and Washington over the next few months will determine whether your portfolio goes up or down, whether your iPhone costs $1,000 or $2,000, whether we're looking at a decade of prosperity or a decade of economic Cold War. So here's what I want you to do. First, smash that subscribe button and like this video because I'm tracking this story every single week. Tell me, do you think American companies should pull out of China, or is that economic suicide? I'm genuinely curious to hear your thoughts in the comments below. The US-China relationship has just entered a new phase. The question isn't whether things are changing, it's whether you're ready for it. Thanks for watching. I'll see you in the next one.